Good morning, students. Today we are here to study commercial studies. Okay? Now, in this subject, our next chapter is finance and accounting. All right? Finance and accounting. Now, in this chapter, we have certain parts. The first part is capital and revenue transactions. Right? Now, regarding transactions, we have learnt about it in class 11. What is a transaction? You know this. But here, we need to learn something more about a transaction. Transaction basically is divided into two parts. Two types of transactions are there, rather. Okay? Two types of transactions are there. This we need to know. If we do not know about this, the division or the types of transactions, the very objective of keeping records of transactions in our books of accounts will be defeated, or rather will be useless. Why? The reason is the result of the business which we like to ascertain at the end of the financial year will not give us the true picture of the business. Right? That is why we need to differentiate between two types of transactions. We need to know what are the types of transactions. Firstly, there are two types of transaction. One is capital transaction. The other part is revenue transaction. Revenue transaction. Now, what are called capital transactions and what are called revenue transactions? This we need to know. First, what are capital transactions? Capital transactions are such type of transactions which occur only once in a year and the benefit of which is enjoyed over a long period of time. Now, here long period refers to more than one financial year. It may be 2 years, it may be 3 years, it may be 5 years or more. Right? Such type of transactions are capital transactions. It happens or it takes place once in a year. Once. Not repeatedly. One particular transaction will occur once only and the benefit will be enjoyed over a long period of time. Right? Now the example. Now you may ask me, how can we understand which is a capital transaction? What are called capital transactions? The definition is like this. The meaning is like this. The transactions which occur once in a year or once only and the benefit of which is enjoyed over a long period of time, and that long period I described that more than one financial year or more than one accounting year. Now the example. Purchase of furniture or purchase of machinery, whatever it is. Right? See here. Purchase of machinery. In our business, in a firm, if a concern buys a machinery for its business operation, suppose in a factory we need machineries to produce goods. So this is a transaction, purchase of machinery. Why is it a transaction? Because monetary involvement is there. There are two parties. We are buying. One concern is buying the machinery from another concern. Two persons are there. So all the features of transaction are being fulfilled in this transaction or in this exchange. Buying machinery, we are buying the machinery, we are giving the money, or we are buying it on credit, whatever it is. That is another question. Anyway, we have to understand what is capital transaction. Now, purchase of machinery. Now, in this transaction, if we do not understand whether it is a capital transaction or it is a revenue transaction, the recording, if a person who is ignorant about it, who doesn't have required knowledge on this about capital transaction and revenue transaction, he may make certain mistakes in recording the transaction in the books of accounts. This is a purchase of machinery. Now, suppose a person, he records it in the purchase account. He records it in purchase account instead of machinery account. What will happen? Purchase account will be more, the amount of total purchase for the year will be more, and as a result, the profit will be less. When we ascertain the profit of the business, profit or loss of the business at the end of the year, then the amount of profit will be less. So that is not a true result of the business, because the business has not earned that much profit this year. Is that clear? So it's a wrong entry because of lack of knowledge about capital transaction and revenue transaction. It is a capital transaction. Why? Because we are not going to buy any concern. They are not going to buy any manufacturing concern. They are not going to buy any machinery every month or every year. Isn't it? The machinery once bought, it will give us service for a long period of time. It is a long-lasting item of the business, and this is acquired for smooth operation of the business transactions. So purchase, if anybody records it in a purchase account, then it will be a wrong entry, as because he doesn't have required knowledge about the types of transaction. Another thing, machinery, buying of machinery. This machinery is for using it in the business, right? So while using an asset, a fixed asset, it will depreciate its value. Any fixed asset depreciates its value year after year. So the depreciation, another one. Depreciation of machinery. This is another transaction. This is another transaction. What type of transaction is this? Capital or revenue? This we have to decide. This also we have to decide whether it is a capital transaction or a revenue transaction. Now, depreciation means decrease in the value of asset. Asset value will decrease. Now, if you do not know whether it is a capital transaction or revenue transaction, you may make mistakes. You may record it in the machinery account. So the value of machinery will come down, right? You have not recorded it in depreciation account, you don't know about depreciation, right? So the result of the business will not come true. Anyway, I am coming again on this point. Purchase of machinery. This is one type of capital transaction. There are many capital transactions. You can note it down. in your book, in your copy. Purchase of furniture or machinery, purchase of fixed assets, purchase of any other thing, any other rights, that is trade right, patent rights, copyrights, etc. These are called capital transaction, because this type of transaction will occur once, but the benefit will be enjoyed over a long period of time. All right. Now come to this part, revenue transaction. What is a revenue transaction? Revenue transactions are such type of transactions which occur repeatedly in a recurring way. In a particular year, revenue transactions may occur many times or in a recurring way, and the benefit of which will be exhausted within that particular accounting period on which year this occurred. Suppose sale of goods, interest on investments, right? These type of transactions, sale of goods, we sell goods every day, throughout the month, throughout the year. So throughout the year, what goods we have sold, that is revenue income, revenue transaction, because it happens every day, every month, every year, throughout the year, and the benefit of which will be exhausted within the period. Payment of salary, received interest on investment. We have invested some money. The concern has invested certain money into the bank, into any other company's shares or debentures like that. Okay, and earning interest. Every year it will earn that interest. So these type of transactions are called revenue transactions. Payment of salary to the employees, payment of electric bill, payment of repairing charges, right? Payment of repairing charges, all right? All these are called revenue transactions. Why? Because this happens off and on, frequently, many times in a year. So as it is recurring in nature, so these type of transactions are called, I'm erasing it for the timing. These type of transactions are called revenue transactions. Sale of goods, payment of salary, repairing charges, etc., etc. All right. So these are called revenue transactions. Why? Because this happens in a recurring way, repeatedly. All right. Is that clear? Now, so from such discussion, we can come to a conclusion that capital transactions, these are fixed once only, and these are recurring in nature. This happens once, fixed or okay. So capital transactions occur once only, it is fixed. It occurs once only. But revenue transactions, such transactions occur in a recurring nature. Clear? Now, there are another division. this capital transactions, it has two parts or two types. If we learn this idea will be more clear to us. Rather, it will be clearer to us. Capital expenditure. Capital income, right? Like capital transactions, revenue transactions also can be divided into two parts. Revenue expenditure revenue income. Capital expenditure, capital income, revenue expenditure and revenue income. Now, what is capital expenditure? The expenditure which occur once only, but the benefit of that expenditure is enjoyed over a long period of time. So, as the case of capital income, the income we earned once only, but the benefit will be enjoyed over a long period of time. That will be treated as capital income. Now, the example, capital expenditure, what I wrote earlier, that is purchase of fixed assets. It may be furniture, it may be machinery, it may be building or something like that. Okay, which we buy once only, which we acquire once only for the business operations, and the benefit we enjoy over a long period of time. That is called capital expenditure. Money spent, that is expenditure. Now, income, capital income, example of capital income. What are those? How can we assess that? How can we learn that? Investment by the proprietor into the business, that is capital investment by the proprietor into the business. In class 11, you have learned the differentiation between a proprietor and the business. They are two separate entities. A business concern is an artificial person, and the proprietor is a real person. So there is a distinction, clear distinction. This you have to feel. You cannot see it. You cannot see the business in physical figure. It does not have any figure, but we have to feel it. The business is as a separate entity or separate an artificial person. So what happens is in real life, what happens? Suppose you are a proprietor or me is a proprietor. Now I am investing my money into my business. That is, business is receiving that income. That is an income for the business. Profit is separate thing. We will come to that point afterwards. Okay. So investment by the proprietor, capital income. Proprietor does not invest every day, every month or every year. He or she invests once only for his or her business, and that investment is used in the business for its smooth operation. So that is a capital income for the business. Clear? In case of sole proprietorship business, in case of partnership business, this investment of capital by the proprietor, by the partners. In case of company business, joint stock company, in case of company business, how the capital is earned? The business, the company earns its capital or raises its capital by issuing shares or debentures in the market. Does a company issue shares every year, every month, every year? No. Once only. Okay. So, and the benefit of that fund, capital fund, will be enjoyed over a long period of time, isn't it? So that is a capital income. Is that clear? Now come to this point, revenue transaction. It has also two parts, two types, revenue expenditure, revenue income. What is revenue expenditure? I just gave you the example. Sale of payment of salary, expenditure on repairs and maintenance, payment of electric bill, payment of entertainment expenses by the business concern. All these are called revenue expenditure. Why? Because these expenditures occur often and frequently in the business during a year, and the benefit of that will be exhausted within that accounting period. Okay, so such transactions are called revenue expenditure. Such expenditures are called revenue expenditures. Now, what is revenue income? Income, revenue income. The example, the definition, the meaning will give you the idea what may be the example of revenue income. Can anybody mention it? No. Anyway, revenue income, sale of goods. What do? We sell goods. What happens for that? We earn some income. By selling goods, we earn certain income. Interest on investment. We have invested our money into the business, into any other where, in bank, in other companies' shares or debentures, etc. And we earn an interest out of that investment. Revenue income. Revenue income. Why? Because this income will come on a recurring basis, on a regular basis. Okay, is that clear? So this is called revenue income. Is that clear? Now, I'm giving you certain questions, certain transactions rather, as your homework. If you can solve it, then you can understand that you have got a clear knowledge on this topic. What is a capital transaction? What is a revenue transaction? How can we segregate that? Write down. Take a problem for this. A firm buys a typewriter. A firm buys a typewriter for rupees 7,600. You have to decide whether it is a capital transaction or revenue transaction firstly, and then you have to differentiate whether it is a capital expenditure or revenue expenditure. With reason you have to write, with reason. Number B. Very interesting one. A firm replaces a manual typewriter with rupees 8,000 worth rupees 8,400 300 with an electronic typewriter $15,700. See, these are almost same, but here buying is occurred, here replacement is occurred. Manual typewriter is being replaced with an electronic typewriter. The value is different. We have to ascertain whether it is a revenue transaction or a capital transaction. Thirdly, a delivery van is purchased for rupees 65,000, and next one is petrol for the delivery van. Petrol for the delivery van is bought for rupees 350. Okay. A delivery van is purchased for rupees 65,000 and petrol for the delivery van is bought. Separate transaction. These two are separate transactions, these two are separate transactions. You have to ascertain which one is a capital transaction, which one is a revenue transaction out of these four. This is your homework. This is your homework. Solve this. If you face any difficulty, ask me the next day. Okay? Thank you very much.